We have different ownership structures now within the three of you.
This maybe isn't quite as good a deal as it used to be. The rules are changing.
Very first thing I did was get punched in the nose and realized that I wasn't a local.
I was looked at the capital raises of Sonda and Vacasa, and I literally went in the cellar and cried.
I don't want it to sound crude and ugly, but as blunt as it sounds, it's...
You've just given your secret source away that probably a lot of people around the world weren't even aware of.
They think it's just twice as hard, but I would say it's quadratically more difficult.
I love thinking 5 years ahead, and then again, you get this call that puts you back into reality.
Box clever into this market in order to sort of survive, bluntly.
Things are going fast and definitely more to come. You are listening to STR Global Unlocked, brought to you by AJL Atelier, the show where I speak with the leaders shaping short-term rentals worldwide. I am Simon Lehmann, and after 2 decades buying, selling, advising, and investing, I've built a network that spans continents and categories. This podcast brings that network to you. Real conversations, global insight, no PR fluff. Let's get started. Today, we're recording a very special panel discussion. We brought together 3 incredible leaders from across the world of short-term rentals, each of whom has built scale in very different but also difficult markets. Graham Donoghue, CEO of Forge Group in the United Kingdom, Scotland at the moment. Steve Schwab, CEO of Casago in the US, which recently took over inventory from Vacasa, United States. And last but not least, Quirin Schwaighofer, co-founder and CEO of MadeComfy in Australia, which have just recently been sold to Oyo. The big question we'll tackle today is, why has nobody built a truly global STR operator? And what the next 5 years might look like. We'll cover a lot of ground today. So let's get this started straight away. It's fantastic to have you, gentlemen. And I want to thank Steve for getting up very, very early in the morning. And I want to thank Quirin for still being awake on a Friday night. And this shows to build an STR global podcast has also its challenges with the different time zones. But these gentlemen made it happen, and I'm very thankful for that. And the kickoff topic I want to bring up today is the elusive global brand. Forge/Sykes has become one of the largest operators in the UK, has been around for decades, and you've dipped into international expansion with an acquisition in New Zealand of a company called BatchCare. But apart from that, you sort of stayed very true to the UK market and the roots of Sykes originally, and have really focused your expansion, your market share, your professionalism, your brand, and everything like that in the UK market. You have a very strong direct distribution brand. And it's interesting that you haven't tipped your toes into other markets. And I would love to hear from you, Graham. What are your thoughts behind building a truly global property management company? Is that really necessary? And what are the challenges behind that?
Well, what a question to start with. I mean, I think when I step back, I look at the facts. It's deeply frustrating for me as someone running our business that we haven't been able to expand internationally because, what is true? It's a big market. It's global. There's 20 odd million properties. It's super fragmented. And ultimately, what we're all doing is taking people on holiday and making sure they have a really good time. As you know better than anybody, as I've looked at this many times, and you've helped me, Simon, look at this many times. And every time I look at it, I realize that on the surface, all these markets look the same. But when you get under the skin of them, they're all very, very different in terms of how they behave, how they operate, the consumer behaviors, and the distribution, consumer acquisition, et cetera, et cetera. And I think one of the challenges I've found is every time I've looked and I've tried to understand, can I create value? And can I take all the lessons that I know about the business I run, which is pretty successful in the UK, and deploy that into other markets and create value? The answer comes back, I'm not really sure. And we've tried it, as you mentioned, on BatchCare. The idea of BatchCare was to deploy our technology and our capability to understand how could we add value. And we found it really hard. We underestimated the difference in consumer behaviors. We underestimated the difference in the way that consumers look at distribution, because the UK is predominantly, a lot of them are direct distribution, very reliant on sort of, direct rebook, whereas it's much more fragmented and there's much more choices in sort of New Zealand.
Can I jump in here for a second, Graham? Because it's an interesting one. Because if you look at it from an outside, you can say there's a lot of similarities with the exception of time zone, right? Same language, it's an island, a lot of domestic demand, a lot of domestic supply, it's sort of a lot of things that for Sykes are absolutely key. All your customers come from the UK, most of them, your supply is in the UK, you have one language, and you've built a lot of knowledge and marketing experience and expertise. Is it really coming down to different consumer behavior?
Yeah, I think different consumer behavior, different desires, different needs, different way that the owners use the properties. It's much more ingrained in the culture, the idea of a batch inside New Zealand. The distribution was a big one for me. The OTAs in particular were much more powerful, much more dominant in the way they behave and operate, which we really underestimated. Our ability to build a direct brand and to get high rebook and invest in that digital marketing and that consumer brand, I think, requires a deeper purse than we really appreciate and realized. And just the way that the technology needs to behave as well, there's ever so slightly different. We couldn't just easily lift and shift our technology and deploy it into one country. There was so many nuances that were market specific that we didn't really appreciate and recognize at the time. So yeah, we found it pretty tough. And every time I've looked at other geographies, be that in Europe or be that in the US, and in the US in particular, obviously I've looked at many times, I thought, God, this is hard. There's probably a good reason why no it's successful. Well, and if I'm honest, that has then retrenched me back into the UK to say, can I get more headroom in the UK, and can I go more horizontal in the way that I look at our product and move into more controlled distribution, other acquisitions, and so far it's sort of there's been enough headroom, but I do think someone will crack it. I do think genuinely someone will crack it. Maybe it's Steve, maybe it's Quirin, I don't know. It's not high on our agenda at the moment, I have to say. It's hard.
Well, thank you for sharing that. That's super interesting. It gives us a massive segue. Also, when we consult customers, they always want to expand in more destinations. And the first question I'm always asking them, how big is your TAM? And then stay where you are and get that to 10% market share or more. And then you can think about getting into new markets if there's not enough supply of the quality that you're looking for. So Steve, obviously Casago is international because you also are in Latin America, joining the United States as well. But I want to focus a little bit more on Vacasa in this particular instance, because Vacasa has tried very hard to internationalize its business. So it's risen and fallen its strategy. And now you're trying to take over as much inventory as you possibly can into Casago franchises and whatever. I think everybody's very familiar what you're trying to do. What is your view on the internationalization and what your next focus is and strategy with these combined inventories?
Yeah, when it comes to going international and going to different markets that have completely different laws, labor laws, you would have different property laws. It feels a pretty big challenge to be able to run it from a central ops. And one of the solves that we have with the business model with Casago is finding people who are, on the ground and understand, the culture of the local community, understands the labor laws, understands, the regulatory issues that are going on, and just being able to operate even just within the culture of the labor force. And we saw that a lot in Vacasa, where just not understanding the local business, especially internationally, was one of the biggest challenges there. And I think when we look at Casago and what we're trying to do, breaking this down into a decentralized franchise model, we're trying to solve for it by finding those people who are hyper-local and can deal with the local issues, block by block. And I think that's really where the difference is between the two different business models.
So would that imply that, Steve, that your main strategy is definitely domestic market, US, and joining Latin American market for now?
For now, yeah, for now, we're in the U.S., Canada, the Caribbean, and Latin America. Focusing on what we have right now is important. We're going through this entire transformation of taking a very centralized model and decentralizing it, and breaking it down to where we're finding people who truly, love the communities, aren't using the communities, and building the reputation, one community at a time. And that's going to be our focus for a while.
Well, definitely a topic we could fill an entire panel, centralizing versus decentralization. We've seen plenty of trials and errors out there as well to make that happen. Also with European players, how much power to give to the local PMCs versus centralizing. And I want to, with that, move on to Quirin out of Australia. I'm obviously being fortunate enough to serve as a chairman for a while for MadeComfy. Because some distinct reasons, one of which I'm a huge Australia fan, but everybody can see that anyway. And second, I found the business model very interesting. And I think it's no big secret, Quirin, when you started as a startup in in Australia, starting with building your business and then thinking about expansion. And then also truly being international. And I think that was one of the challenges as well when raising capital, where the Australian market or local investment market is more challenging to raise capital if it's not truly international. So it was a chicken and egg for you guys as well. But let's allude a little bit on MadeComfy and then obviously where were your thoughts before the transaction happened with Oyo in terms of internationalization and what you can do with your business?
I think for us, Australia is a country, but it's a continent. So there are so many different markets and pockets. So when we started in Sydney, about 10 years ago, we had this big vision. We built a global short-term rental brand, B2C. And the markets will be very similar to Sydney. We thought that about Melbourne, we thought about Brisbane and Central Coast, but we quickly realized that even in Australia, if you, for example, you come from New South Wales and you launch in Queensland, it's pretty much like a different country. A bit what Graham sort of talked about before. So when we were managing property owners directly, we realized that is tricky. So how do you acquire? How do you keep? How do you build local operations and all of this? And how do you replicate that in every sort of location where you really can't drive? You've got to fly everywhere. Different time zones. And sort of during COVID, the whole thing, we were thinking about how do we scale with little capital, and how do we get access to properties. We played a little bit with the franchise idea, but what is a bit unique maybe in Australia is that 76% of properties are in general managed by real estate agents, property managers. Australians love to invest in property. Investment properties turn around every 7 to 10 years. So if you wait a little bit, you get in front of every single property if you're a real estate agent. And what we were wondering is like, why are they not doing short-term rentals, vacation rentals? Some do, but really not many. We were competing with some. We were trying to partner with a few. But what we identified is that opportunity to have that hyper-local approach by enabling and partnering with real estate agents powered by MadeComfy. They have a local community. They're in a footy club. They're selling those properties. They're appraising long-term rentals or, now also short-term rentals. And that's what we changed. That's when I think also we met Simon. And I remember when I think we were driving to a meeting somewhere in Switzerland, and I sort of shared this idea with you. And it was a bit of a moment like, oh, that works out. That would be interesting. And so 4 years later now, 70% of our inventory is managed by real estate agents. We mainly grow with that. So we're solving the problems of our real estate agents. They acquire the properties. And with that, we are able to launch quite capital light in markets Australia and New Zealand.
You've just given your secret source away that probably a lot of people around the world weren't even aware of, but it had to happen at one stage. And obviously internationalization is becoming pretty obvious, that any Anglo-Saxon market where the real estate markets have similar dynamics, like the US and UK and Ireland and New Zealand. And you already have an office in New Zealand, so that's going to be interesting. And we'll talk about scale in a minute as well. But I guess we can allude that for Oyo, this was also an internationalization acquisition, right?
Yeah, I mean, I'm giving the secret sauce away. The secret sauce is not that. The secret sauce is how do you actually connect with real estate agents and enable them to be successful. So it's super complex. You're adding another layer of stakeholders in an already very complex value chain between guests, OTAs, property manager, property owner. Now you're adding an agent that needs to know everything about the property because they are managing the property owner. So yeah, highly complex, but I think it's sort of for Oyo, it's Oyo sort of, I remember when I read that they acquired Belvilla in Europe in 2019. I was like, oh wow, they're entering the short-term rental space now, and I've been sort of following them since. Yeah, I think for Oyo, of course, they wanted to enter Australia and New Zealand, but our business model being unique and applicable within Oyo's network was definitely also one reason that we started talking last year.
Excellent. Interesting news all the way. Today we heard that Interhome has now been finally fully taken over by Home2Go. So interesting times. Management changes have already been announced. Things are going fast, and definitely more to come. Back to Steve. I want to move on to scale and investment appetite, right? So, from a US perspective, what level of scale do you think you really need in order to go to the next level in terms of investment and growing the business forward? And what is scale for you, and what you're focusing on in creating value?
Yeah, I think we're sort of doing the opposite of a normal scale. We're going global but local, local, if you want to call it that. The local. The investment appetite is certainly out there. We're seeing it. So there's a lot of interest at some pretty large levels of trying to come in and see what we're doing. You're seeing that across the entire United States right now. There's a ton of activity happening. For us, seeing that institutional money coming in and looking to play is certainly a big part of the dynamics going forward. It's just important to remember that, as you look at what's different between vacation rentals and hotels and airlines, is unlike the hotels or airlines where you have a homogenized, seat or room in which the company, actually owns it. We don't own the market. We have a lot of a very local culture that happens with the homeowners. I always talk about when I first got started here in Puerto Penasco and went to my first city. I thought I was pretty smart. I was just going to rubber stamp this thing. Very first thing I did was get punched in the nose and realized that I wasn't a local, in San Carlos as opposed to Puerto Penasco, and learned pretty quickly I wasn't as smart as I thought I was, because the homeowners there, it's not just the travelers, it's not just the behaviors of those who are booking. It's also homeowners who have a very different expectation in one city compared to another. And even having the same owner in multiple markets, they'll have an expectation of how you operate their properties in different cities. So really looking to mix that when you think about going to scale, how are you going to take that scale and keep it local? Because at the end of the day, every property is so unique and every market is so hyper-localized. Until you're on the ground operating it, it's just really difficult to bring that investment level to local markets.
Yeah, that's super interesting. Scaling while trying to be local is definitely a massive challenge, and definitely going to be interesting as you onboard more properties from Vacasa as well within your system. We'll talk about the business model in a short while. Moving that to Graham. Graham, Forge Group Sykes is owned by a large cap private equity company, so you could probably talk to us about KPIs and scale for the next half hour. But still, I would be super interested. I mean, we have different ownership structures now within the three of you. one owned by Strategic, another also by an investment group, a new by a really traditional large cap private equity. You probably get grilled most in relation to scale and KPIs. What can you share in terms of your, what is measured or what counts? Also from an investment perspective, it's, we talk a lot on the day-to-day conversations about units, revenue, ADR, occupancy, RevPAR, this type of stuff. But I think you have taken this totally to a next level.
Yeah, I mean, we have a lot of data, we have a lot of KPIs, etc. But we tend to think more around value creation. I think being owned, obviously, private equity owned, as you mentioned. I think you spend a lot of time thinking about where's the value going to come from, knowing that you're on a journey in could be 5 years' time, could be 10 years' time, but eventually there'll be a transaction that happens. So you have to try and work your way back from that. So we spend a lot of time. So at the moment we're 2025, most of my thinking is in 2030. And so when I'm talking to, my executive team and I'm talking to the business.
2030, did you say?
Yeah. So most of my thinking is like, what does the business look like in 2030? Whether I'm there or not in 2030 is irrelevant because it's more around like, we need to create a legacy for this business. We need to understand what the value creation looks like. And there'll be a set of number that drives that. And there'll be things that fuel that, likely to be stock count, but also maybe around, your revenue, your income, your customer acquisition. At the moment, we're obsessing quite a lot around operational efficiency, operational gearing, and actually leveraging AI in particular. As you know, I'm a sort of a fan of AI in terms of how we use it in the business and trying to crystal ball gaze. How do I believe owners and consumers and our employees will be using tools and technology in the future in 2030, and how do we sort of lean into that and think about a more agentic way of designing and developing our business? So I have to have people in my business that are, I think in these 3 horizons, horizon 1, 2, and 3. I've got, day-to-day operational people looking at horizon 1, which is like the next 12 months trading. And then I have a group of people looking at horizon 2, which is like, maybe in 2 years' time, beyond that. And then I have to have enough people looking at horizon 3, which is 2030, and working our way back. And then we start thinking about like, how do we scale? What's the technology? What's the investment? What do we think that will do to revenue? What do you think will do to EBITDA? What's the story we want to tell, which is critically important? And then how do we execute against it? And that's how we play into it.
Super interesting. So when I asked you about, in relation to scale, your core of the answer was we want to create value. And how do you break that down and how do you measure that with where you want to go with the business?
Well, I don't want it to sound crude and ugly, but as blunt as it sounds, it's around the equity value we think we'll create in the business. Now, you can create equity value in a business in multiple different ways. You can have a very high multiple of your earnings, or you can have high earnings with a lower sort of multiple, and then everything in between. And who knows, because the markets ebb and flow. We're probably in a bit of a depressed environment at the moment where, values are not as high as they were, and debt is difficult, it's expensive, et cetera, et cetera. But we tend to work on, what do we need to look at like in the future? How do we think that equity value will be derived? What are the levers we're going to pull to create that? And then we'll work our way back. And generally, you need things like supply. You need things like margin expansion. You need to know how you're going to convert. You need to know how, how many customers you're going to have, how many property owners you're going to have, how your revenue is going to flow, your occupancy, your ADRs, all that sort of stuff. And we model all of that. And we get it wrong all the time, but we have to start with a model and work our way back, and then say, okay, then how do we get there? And then it normally comes to a point where you say, what investment do we require to get there as well? And then that requires another conversation around, do we have to refi the business? Do we have to go and find additional investors? Do we need to, are we planning to make a big acquisition because we kind of got to get there. So that's generally how we model it out. We sort of begin with the end in mind and we work our way back, but we make sure we have enough people looking at those 3 horizons to understand what the story sort of looks like, and how it plays into value.
Fantastic. Well, I'm glad I did a little bit more digging there. And, at the end of the day, we need to think about our markets and our ownerships, and maximizing value has different levels as well. Bringing that back to Quirin and probably get a little bit more concrete in terms of your recent transaction with selling a business to a strategic buyer, and talk a little bit about this process. What was the key drivers in relation to scale and your business for any strategic investor looking at your business in relation to unit economics, growth, and things like that, and specifically your buyer that has acquired you. But MadeComfy was always a company that was already extremely well, call it documented. Your management information system was well above average from what I have seen in many property management companies of your size. But what was the key that they were looking at in terms of scale and driving value for the acquisition?
I think Sabrina and I, we both started the business with setting it up for scale, and we always, when Graham talked about 2030, I think we, for a long time, that was the main thing. Where do we head to, and let's build the business according to that. We've been audited after year 3. We've run a board also after year 3 already. So we got you involved first to advise us, and then being as our chair on our board. So we always had this kind of vision to set the business up and to be run professionally. On the other side, our big business model being B2B2C is all around serving customers, making short-term rentals professional, helping our housekeeping partners run a professional business, helping our tradies to be more structured, more organized, our even real estate partners, what I didn't really think at the beginning, but there's a lot we can help them. So there's a lot of this professionalism and structure that we require, and has been something we always had. Now, we were not looking at, and as you know, we were not looking at selling the business. We had our plan to keep growing in Australia, and we were preparing for some international markets, and did quite an analysis there where we think that our business model could work as well. Our platform is already international. We do multiple time zones, multiple currencies. We operate in New Zealand as well. So that was our plan, and we have been approached by three strategic buyers last year, which was interesting. The first 2, that was very easy now. And the ones we were really not, and you know me, we were not looking to be bought. It was only really when I met Shirish and then Ritesh that I, for the first time, thought they think very similar to me. Super quick, super sharp, down in the detail, passion for the supply side, but also for the operational side. Significantly bigger, executional excellence than we got to in a very similar time frame. And yeah, on our side, I'd say in a much smaller scale, but we were able to answer questions really, really quickly around certain metrics, of course, down to sellable home nights, RevPAR, by market, by sort of the evolution of RevPAR by year. Does your stock go down or go up in sort of RevPAR over years? So all of that we were able to provide overnight pretty much, and I think that was quite impressive. And then going to those sort of business model, for us, because we really did not have much access to capital. When I was looked at the capital raises of Sonda and Vacasa, I literally went in the cellar and cried. Just a tenth of that. We could do so much with this. And we still raised close to 20 million over a year, but we really didn't have this one lump where we said, okay, now let's focus, do something with that. And So we had to look after every dollar all the time. So the business model that we developed was pretty much a evolution of our strategic thinking, growing big, being structured, and then looking after every penny and ensuring that we're not spending this on supply acquisition, especially, or demand acquisition.
Super interesting. And you gave me a beautiful segue, Quirin, to talk about business model. I've had a lot of recent conversation with different executives in this industry and seeing some moves where, somebody tried to build a large United States company as a SaaS business, but we didn't know what the abbreviation meant. Is it software as a service or service as a software, right? And a lot of things have been learned along the way in terms of, and we had super interesting conversations this year with actually Graham and Steve to talk about, proprietary technology helping you to differentiate yourself, or you going with off-the-shelf software. And we see a lot of movements in the space, but I want to talk about more the core business model right now. And I want to start with Graham on that. I mean, obviously, Sykes is definitely more an exclusive distribution business than it is an operating business. But that's also come historically where homeowners in the UK live closer to the properties. They manage it themselves, but you do the distribution. But I would love to hear your general view in how you viewed or how you're viewing all the different business models that are out there from an end-to-end full-service property management service that more like a Quirin and Steve are providing to their owners and their guests. And you are clearly differentiated, and maybe New Zealand is maybe more full-service business as well. But what is sort of your view, Graham, on the different business models out there and how you foresee the future and how is that going to be evolving?
Well, I mean, it's been interesting the last 12 months because so I've been doing this job for almost 10 years. And for at least maybe 8 of those years, the thing I used to worry about constantly was supply. I used to always say I have more demand than I need. Now it's about supply. That's what I need. But in the last 24 months, I'm not 100% sure why, which is scary. It seems to have flipped a little bit. Demand actually has become more of a challenge, and supply seems to be like rolling in, weirdly. I have a hypothesis, which again, I don't have a huge amount of data. I've got some data, and I can only really speak about the UK market in particular.
Sure.
But when we look at the market, we think of the market in sort of the 3 core segments, like property managers, professionally run. There's 3 big ones in the UK, and then there's a long trail. To be honest with you, those 3 big ones have acquired most of them.
Yeah.
And we've read a lot of that over the years. You then obviously have homes in the UK that haven't been rented out but are second homes, and there's a lot of them, hundreds of thousands of them, maybe 130,000 of them.
Wow.
And then you have homes in the UK that we call the RBO market, guaranteed by the owner, direct, which
Which is at about half of the supply, UK?
Well, we think it's about another 130,000,
Okay.
roughly. So, so market size in the UK, 500,000 properties. What have we got? On the agency business, 24, 25,000 properties.
Yeah.
So you step back and you think, well, supply shouldn't be an issue. But I think what I'm seeing is as regulation has increased in the UK and the cost of living of operating and running a second home has gone up significantly in the UK, I'm now seeing more of those second homes that are not rented out. Those owners are now choosing to say, well, maybe we should rent it out. Maybe we should try to generate some income in that. And that's bringing in, more supply into our sort of a market. And then more recently, I would say in the last maybe 10 months, I'm seeing the RBO market. So people who used to rent, particularly with Airbnb, less so Booking.com, but particularly Airbnb, moving to saying, well, do you know what? This maybe isn't quite as good a deal as it used to be. The rules are changing. They're changing the way that they're treating hosts. And actually, for not a lot more commission, I can have someone who just takes away all the pain and does everything that, that I'm sort of spending all my waking hours to do. Now, there is a segment of people that clearly love that interaction, but there's a segment of people who don't. And so is that a different business model? I don't entirely know. But, we're now sitting here saying, actually, supply is going incredibly well, and demand is becoming more of the challenge. And that has then forced us as an organization to say, I can't really sit on a business that's 80% direct anymore, because it's getting too hard to defend. What I need to then do is to utilize some of the other distribution channels that exist, particularly for OTAs, and recognize there's just a different cohort of customers out there.
Of course.
Utilizing those channels and lean into them, particularly for international guests, which they can do a lot better. But more recently, what I'm seeing is for guests that want like real last minute and minimum stay of, say, one night, which is something we would never have considered doing 12 months ago. But now, by opening up our portfolio. So I think the world is getting really confusing, in terms of what the business models is. And I'm not speaking about franchise here or various different things. I'm talking more just around how we look at the market and how we have to trade our way and box clever into this market in order to sort of survive, bluntly.
Super interesting. So I find that very interesting, and there's so many segues here. Also about the one nights, and now especially since Airbnb announced the rate hike and the split with own, that's going to have a massive impact. I've just written a newspaper article in Switzerland about that today. Actually, I was asked to comment, and what does that really mean for the consumer? And I've just came back from a consulting mandate this week, 3 days in the mountains, and they deal with the 1 day stay with 4-night price in the high season, and it works. It works fantastically. So it's interesting how we are forced in a way to operate smarter, because we need to always question the tradition to be better and be ahead of the game. But I hear out from you, Graham, you're not hiring an armada of cleaners and get into the service business, right?
No, sorry. And yes, I mean, we're still of the, we do 1 million bookings a year, roughly, in the UK. And of those 1 million bookings a year, but 150,000 of those bookings, we facilitate the cleaning.
Wow.
And the maintenance and management. Everything else is done either by a third party or by the owner themselves. However, every single one of them we monitor and we facilitate through our software. So there's quite a high degree of rigor around the feedback, the net promoter score,
Sure,
the cleaning score, and all that sort of stuff. So, although we don't have direct control, we monitor, because ultimately it's about delivering a good guest experience and helping owners, improve their service, because they just, they don't always know.
of course. Excellent. So we have a bit of a different case across the pond. Steve, I mean, looking at how you build Casago and where you came from, what you thought, what sort of a hybrid, if we call it, but you can explain that a little bit better. And then going after a hardcore full service PMC that has had challenge to have good enough unit densities to operate profitably across all the different markets and other things. What does that mean, and how you look at the business model going forward? Are you looking at entirely franchising it? How do you look at the service business?
Yeah, so we're selling off every bit of it. We're going completely to the franchise model. A big believer in it. When you think of the different business models, I'm not sure there's necessarily one right business model. I think what Graham's doing is working there, and if I tried to take my business model and transpose it where he's at, there's a high probability of failure. Making sure that you understand exactly what's happening at the part of the world that you're working at is going to be the key to success here. We're seeing this as, the truth is, you can't make large decisions for the entire country of 40,000, 50,000 units in one decision and think it's going to work in all places. Making these macro decisions for a company that's operating in different markets with different seasonality, with different expectations, with different unit size, unit type, even business model on the local level, ski lease compared to, short-term compared to midterm, making decisions across a large portfolio just doesn't work in this business the way that I see it. So breaking this back down to there's somebody who's hyper local, there is somebody on the ground who can take care of those homeowners. The decisions that are being made when they're closer to that front door of that property, the better the outcomes are for all the stakeholders, for the homeowner, for the guest, for the community itself, even for the teammates and employees that are there with them. So, we see it over and over again when people try to scale from one market to another. They think it's just twice as hard, but I would say it's quadratically more difficult. It's not just twice as hard, it's 4 times as hard to go from one market to another. And you start adding on more and more markets, especially on a full service model, it becomes incredibly painful. So I think there's a lot of different ways to get to success. I'm not a believer that the model of consolidating it and trying to run it from central operations is probably the one way I would say is definitely not the right way to do it. Looking at it from a local level is going to have to be how you end up building this global brand.
Can I just interject just a little, because it may be something I should clarify, which I don't know if you're aware, Steve, that although Sykes is like the parent company, effectively, or Forge is the parent company, Sykes is the power brand, we put a lot of marketing behind. We run 24 different brands in the UK with 40 offices all over the UK, and every single one of them has regional staff, employees that represent the local brand. So it's not franchise because we own them, but the reason why we have it closed and consolidated them and turned them into like just as one power brand under Sykes is because we know the value of local relationships, the value of a local office, the value of being a good corporate citizen locally as well, sponsoring the football team, all that sort of stuff. And for us, it's like a great way to maintain that, but also to hold on to the supply. If I closed them and got rid of them, I know deep down I would lose a big proportion of my supply, because a lot of the owners we have, they don't do it because they're running it as a financially, like lucrative business. It's about relationships. So it's not the same model, but actually it has got similarities.
Yeah, I totally see that. And the truth is, how many of your homeowners stay with you because of the local team, right? I mean, I can tell you that even in this, a lot of the homeowners in Vacasa have said, I'm sticking with you guys because I love my local team, right? So the fact that you're empowering the locals, letting them make their own decisions and be close to the community is a big part of what makes a property management company sticky.
Yeah, and it's hospitality. Yeah, because that's what we're doing. They're delivering hospitality to the owners, but hospitality to guests as well. So, sorry, apologies for interjecting there.
No, not at all. That's a great input. So, if I hear you, Steve, you need to stay flexible. You need to look at market by market. There is not one size fits all. Specifically, also, the type of homeowners and everything else. And at the same time, you could be devil's advocate and say, hey, Evolve has now 35,000 units on their platform exclusively as well, and run let's say a grand Donoghue, a Sykes business model in the UK, in the US, which is quite interesting as well. So there's room for a lot, but the value creation. And I think one of the things I want to ask you, Steve, before we move to Quirin, is in relation to that business model that a lot more operators are now trying to get rid of the service aspect, subcontract that, not doing the cleaning anymore, and more focus on the distribution and the brand. It's easier. It's less of a headache and everything else. How do you deal within your group or your organization with that aspect?
Part of our vision talks about that we're here to be invaluable to the homeowner when they're away. And a big part of our business model, and it's not everybody's business model, but our business model is to build a relationship that transcends business with the homeowners and to be their advocate on the ground when they're somewhere else focused on something else. And we find that that's our highest and best value. And that's how we build relationships and trust through competence, through intention, through being on the ground for them. That's how Casago is building our brand around it. And that's not the only way to do it. Going even more asset light than the franchise model to a real booking play, is certainly a valid business model. I don't know if that's going to ever be Casago's business model. I think we have components of that, but for us, being the homeowner's advocate on the ground and full service is where we're trying to put our value and build our brand from.
Quirin, before it gets too late, in terms of your business model as well, you're now going to conquer the world and scaling through real estate agents. What are your thoughts of your own? Because one thing that obviously the audience needs to know that MadeComfy has Sydney and Melbourne running your own property management business, and the rest is run through real estate agents. What are your thoughts about now the business model you're seeing scale through powering real estate agents with MadeComfy Pro versus running your own business? Well, how did that affect how does that affect your strategic thinking in terms of your business model?
Yeah, I think the advantage we have, we can do both. So we are definitely thinking about like Sydney, Melbourne. We've been thinking a lot. We also sort of turn this into an Asian-focused market, but in the end, we're already here. We have a lot of the relationships where our business model really helps us with those relationships, where it takes a long time if we launch in a new market with a new brand to sort of build those. And for us, what we sort of have seen now, we ran MadeComfy Pro, as we call it, in stealth for the first 3 years. And it's only like 18 months ago that we announced it, and we were growing purely through referrals. It is something that sort of enables the real estate agents. They're losing properties to short-term rental managers. And of course, for us, everyone that is missing out a little bit, we help them to create more value that sort of gets us into those kind of communities. They also sponsor the footy club. They're often in the footy club. They also talk to the local developers. So yeah, for us, the core focus is on helping more real estate agents, helping them to be also like supply engines, keeping them away a little bit from the hospitality side. So it's something that we've sort of seen, real estate, especially the sales side, and the property management side is not really very close to what we do in regards to response time, on especially guest communication and things like that. So keeping those two things apart, a really important part. But yeah, we will continue to focus in certain urban markets to run direct. Now we are part of Oyo now. Oyo does not just do short-term rentals, but Oyo is not only operating in Australia. So the idea is definitely to enable locations where Oyo operates to benefit from our business model. And that's the exciting part as well. Like for me, I'm a entrepreneur throughout. I love thinking 5 years ahead, and then again you get this call that puts it back into reality. Building, you don't know what's happening. If I know what's happening in a year, I think that would be the end for me. To say I can't add value anymore, but that's sort of the exciting part. Keep building, but also executing, running things efficiently. Now the whole AI time that we're currently in is an incredible opportunity for everyone to become especially more efficient as a person and as a company. So yeah.
Fantastic. Thank you. And yeah, we managed exceptionally well for already 48 minutes without talking about AI. Graham brought it up after 20 minutes, which I thought was pretty impressive.
I had to take a little bit.
And
Yes, we will do this.
we will definitely do a separate panel. There's so many use cases out there. We really want to dig deep into AI, and we'll definitely come back to that topic. When I see the use cases out there in today's STR world already, with all the agents, different languages, different I mean, whatever it is, it's just incredible. But at the end of the day, thank God we're still, the human capital still remains extremely important in the STR space and will continue to do so. Being mindful of time, I want to wrap this up. And for the ones who sort of missed our investor panel in London in May at the STAA, I want to bring that sort of last question to my panelists in relation to what role plays technology within our industry, and then last, and I include that, what is sort of the global outlook for you in the next couple of years when we look at the short-term rental industry? Are there going to be significant changes or not? But we talk about technology. How does that impact our business, and what do we need to be mindful about, and what is the global outlook? Graham, do you want to take that first?
Yeah, well, I think, as I've always said, I mean, technology for us is an enabler. We are a hospitality business. The blend of human capital to deliver exceptional or even unreasonable hospitality, if you want, together with technology is what we think is our superpower. And again, we don't really talk about AI, but for the moment, I see this wave happening in terms of how AI can really help and unlock, extreme sort of competitive advantages for people who will lead into it. So technology is really important. But I think the people who will win with the company who can blend technology and the human capital sort of together, because that acts as a moat around your business. Unless you're a pure play technology company. I think the outlook generally, look, this industry's been around for a hell of a long time. I have brands in my portfolio that are 60 years old. It's very resilient. I think it's been really tough the last 3 or 4 years. Been really tough. I do think there is some light at the end of the tunnel. I think we are coming out the other side, but I do think there will be more consolidation. I do think we will probably see some people sort of falling away. Whether we're going to see the level of investment in the sector that we've seen historically, I think the jury is still out, on that one. Maybe we'll wait the next 12 months. We'll see what's sort of happening. But I'm pretty optimistic about the future. And I think I'm pretty confident that, there's going to be some great businesses that continue to evolve and do some incredible sort of things and deliver exceptional experience.
Awesome. Thank you, Graham. Great summary. Steve.
Yeah, so I think that over, we look at the next 5 years, we're going to see a lot more consolidation of tech and operators, here in the U.S. Tech is going to evolve and accelerate. I think, to Graham's point, making sure that we're using it to enable our people and, our interactions is going to be important, making this, bionic so that we have more time to spend in the human element as opposed to robotic, where people are just getting to interface with chatbots. It doesn't feel like there's a true hospitality partner involved with them is going to be important. I think that we're going to see a lot of resistance towards OTAs coming up. We're already seeing, some people who feel like, that the OTAs are being fair. A lot more focus on book direct strategies and then hopefully we're going to find some institutional capital backing brands with both scale and soul to them. And so, over the next 5 years, I think that's going to be important as we take technology, mix it into the human portion of our business, and then trying to just preserve jobs for our teammates to make sure that our face-to-face brand is there. It's not a face-to AI brand. It's going to be important as we go forward.
Thank you, Steve. Amazing. I love the OTA input as well. Had a recent conversation about that, understanding where the demand is coming from in the future is something we need to spend a lot of time on. I seen an article yesterday how Booking.com is utilizing TikTok for distribution while the channels are shifting. So it's going to be super interesting to see that too. Quirin.
Yeah, to sort of be the last one here to add a few things, I think.
Hard one to be the last.
Yeah, now I think to summarize all of this, what will be key, whoever builds trust at scale, will be able to reach this target of what we talked about being really global. I do believe AI will help us to focus more on those moments of truth, which are personal interactions. That's from the moment you meet a property owner for the first time. That's when you have to help a guest. That's when you work with your cleaning teams, with your tradies. This will remain all hands-on activities. I think until we see robots do that is maybe not in my lifetime, or maybe not in my working lifetime. So yeah, technology will help us to focus on those moments of truth, and I think business models are also sharpening further. And yeah, I think really exciting time to be in at the moment in our industry and in general, with all the tools we have these days and access to information and those global panels.
Awesome. Fantastic, gentlemen. I really, truly want to thank you. I hope that Graham will find Loch Ness with his binoculars behind him. And thank you.
I wanted to ask him, is that what it's for? It's like, must
Thank you,
be.
guys.
Can't be prepared.
It's 14 miles long, this lock. It's big.
Yeah.
So thank you for joining us today. This has been super intriguing. Some great takeaway, trust at scale, blend technology and human capital. Is there more investment to come is a question. More consolidation, we all see that too. Hey, and think about where OTAs are heading and where your booking is coming from in the future. Ladies and gentlemen, thank you so much, Steve Schwab. Have a wonderful day. You're up early, so you have still a Friday ahead of you, Graham. You're close to a drink in the afternoon. And Quirin, good night. Thank you so much for joining STR Global Unlocked, and wishing you a wonderful evening and a great weekend ahead. That was STR Global Unlocked, where we say what others won't. If you got value from today's episode, send it to someone who is still playing it safe. Follow the show and get more global insight at ajlatelier.com. The globally recognized STR consultancy I founded and that proudly brings to you this show. More bold conversations are on the way, so stay tuned.